Good evening, everyone. I'm excited to welcome you all to our most awaited event. Today, we have with us Dr. Mohit Batra, our founder, and Amit Golia, our group CEO, as they unveil our new mutual fund platform. Get ready to discover game changing features that will transform your investment strategy. We'll also be hosting a Q&A session, so feel free to post your questions in the comment box below. Over to you, Mohit sir and Amit sir.
Thanks a lot, Mehtab. A very warm welcome to all of you. This is a landmark event for us, which we are conducting through the webinar today. This is a dream come true after 10 years of Markets Mojo's existence. I will give you a little bit of a backdrop in terms of the perspective of what we are doing today. I don't know if some of you have been a part of our journey for a long period, but let me just tell you that when we started Markets Mojo's idea was not my idea. It was Joyson's idea in terms of how we can make, because we came from money control background, how we can make money control a little better. Obviously, we evolved it over a period of time. And, within 1 year, in terms of our features, in terms of what research that we were doing, advisory that we were doing, we went miles ahead in terms of our proposition. My objective when I wanted to start on my own was to create India's best wealth management platform. And because we started Markets Mojo first, we kept the wealth management platform on the back burner. And we said that we'll come back to this when we get time. And, we didn't get time for 10 years. We finally got time now, all courtesy to Amit, who's joined us as Group CEO, and his immediate focus was to launch the whole wealth management business. I am extremely proud to tell you that today we are launching with you Markets Mojo's wealth management business. This is the third business that we are launching. Our first business was the research business. Our second business was the PMS business. And the third business that we are launching now is the whole wealth management business, starting with mutual funds, but moving ahead onto various exciting things. Stay till the end. There is enough for all of you. There is something that we will touch upon that you have been looking forward to for a long, long time. You've been asking us repeatedly in every webinar, and you've been talking about it for the last couple of years almost, since the time that we soft launched a mutual fund product. But here we are changing the game of the industry. We're changing how the industry works in terms of evaluation, in terms of performance orientation on the mutual fund side. So whatever we have done so far on the equity side, we are replicating and making it better on the wealth management side. With that note, let us open the proceedings with the disclaimer, and let me just straight away dive into the product for you. As I said, stay right till the end, because there's a lot of things that you need to know which can radically change the way you invest onto various mutual funds, as well as how we will build up the whole proposition on the wealth management side. Before I start, a small disclaimer. We emphasize that all investors should use the information in the webinar merely as a resource for their own research and understanding. Nothing discussed in this webinar should be considered as investment advice. We strongly advise all investors and participants to check with certified experts before taking any investment decision. And investment in equities and mutual funds are subject to market risk. Please read all the scheme documents before you invest. Markets Mojo today launches the wealth management business under the URL www.mojomf.com. I repeat, the business is being launched under the URL www.mojomf.com. Before all you investors start asking me whether you are a part of it or not, please stay put. Mojo One investors will always get a benefit, as we have already and always told them that new features will come to them first and will come to them within the package. We will discuss with all of you that particular one. So please stay neutral, stay de-stressed. We have a long journey to cover through this particular presentation. We are starting wealth management with the mutual fund business, and we will keep building up on that particular business moving forward. So what will come later on will be insurance, will be loans, will be gold, we will eventually dovetail into the whole financial planning platform. The same financial planning approach that I've been talking to you through webinars is something that we are going to build onto the platform so that you can completely take the benefit of planning the whole financials for you and your family members across one generation to the other generation. So we will keep building the platform across. Let's dovetail into the industry first and see what's happening in the industry. Interest of the average Indian saver continues to drive extremely robust growth in mutual funds in the country today. Let's look at some of the numbers. Now, if you look at the growth of the mutual fund industry, it is pretty radical. And also, I would say radical also from the fact that we had a very low base impact. When you have a low base impact, I think the big explosion that is happening in the mutual fund side of AUM collection is pretty much inevitable. If you look at the current AUM of the mutual fund industry, which stands at 61 lakh crores, almost 50% of this AUM is into the equity-linked mutual funds. Now, 50% of the AUM in equity-linked mutual funds, but I'm also very excited to see that the remaining 50% is in debt side. And due to India being a high interest FD earning country, still having a 50% wallet share towards debt is a very, very big thing. There is something wrong with the whole FDs and banking sector. That is the reason that you will see point number 4, that mutual fund AUM as a percentage of bank FDs has increased from 16% to 27%. So a lot of money is moving from FDs to mutual funds, primarily on the debt allocation side as well, because the FD rates are not attractive. The PPF rates, the PF rates, the short-term debt, the long-term debts, the debt instruments rate, the corporate debt rate are way better than today what an FD or a bank FD gives. And hence you're seeing that 50% of the AUM is on the equity side and 50 is on the debt side. If you look at the number of mutual fund investors, it has again gone multiplied by a large number. Few years back, the number used to be 1.6 crores investors. Today, we are sitting at 4.75 crore investors. So you're talking of a good 4-5% of the country's population already starting to invest, and this number is multiplying very, very fast. SIP inflows is growing at a robust pace, and almost 23,000 crores monthly investments are coming through SIP. So the growth of the industry, mutual fund industry, is undoubtedly one of the fastest growing today in the whole financial services sector. Now, if you look, the growth of the mutual fund AUM is very strong, but this is also translated into, has this actually made money for the investors is the main question. And we've been harping on this for 2-3 years now that, that mutual fund investors doesn't pay that very well to the investors. There is certain data that you will see on the next slide, which will tell you what we are talking out here. Now, if you look at 5-year period, which is a decent period as far as we in India call as the long term, in growth markets, in developed markets, typically long term comes from 7 to 10 years. But in India, the definition is maybe 3 to 5 years. But if you look at a 5-year period, majority of the schemes have underperformed the index. If you look at large cap, the number is astounding. 87% of the large cap schemes have underperformed. If you look at mid caps, 82% of the mid caps have underperformed, flexi cap 69%, multi cap 62%, small caps and 58%. Biting the bullet, there are only 2 options with investors today. Either you invest with superior advisory to beat the benchmark if you want to participate and on an active basis to beat the benchmark, or just invest in index. This horde of investors typically running towards direct funds. I really don't understand that objective. आपका पैसा बचाना है, वो तो अपन, we are also saving that money from places like Zerodha and Grow and various other places where you're going towards a direct scheme. But direct scheme, you want to save money, you come into the market to save money or make money. I never get this whole perception of the investors कि बनाना हमें सब कुछ है लेकिन खर्चा हमें ₹1 नहीं करना है. If you are coming into the market to make money, then the objective should be very clear to make money. If you are in the market to save money, then the objective should be that don't care about how much money you make, just save money. And saving of money is 50 basis point or 60 basis point, right? But if you're underperforming on a large basis, which is what is happening because a lot of investors today are moving towards direct scheme. Advice hota nahi hai. Every investor thinks that they know everything and they'll move towards the best schemes, which are schemes that have done good returns. And they would want to move in on the direct route. And suddenly they realize that एक साल का return आया, लेकिन second year again the return has not come. And suddenly you realize that I came in here to save that 50 basis point or to make money. Across the class, if you see, the underperformance is biting in. What does that tell you? If you see my next slide, it will clearly highlight the reality check, which is that high percentage of underperforming schemes are there unless you get professional guidance, unless you get the right time to switch onto performing funds, you will keep on a longer term basis, keep underperforming the index. And that is the story of the Indian investor, as you've seen in the last slide, that majority of the Indian investors or the Indian schemes are underperforming, and so are the investors. What we've also seen very interestingly is that no mutual fund scheme consistently remains in the top quartile. So a scheme that you may see the return, last 1 year return, because return to aapko, you will get it at every place, right? You will get it on all these sites that you visit. You will get it on Money Control. You will get it on Grow. You will get it on any other site that you're going today, that typically a filter on 1 saal ka return kitna tha, 2 saal ka, 3 saal ka. But the interesting thing that happens is that no scheme, if the scheme is in the first quartile or it is rated very high in the last 1 year return, there are very high chances, higher chances, in fact, that next year it will underperform. I was discussing this in one of the events in Mumbai, that in 2009, I had done this analysis that if you take all the mutual fund schemes and divide it into 4 quartiles, top quartile being the highest return on a 1 year basis, then the second quartile, second highest return, and the last quartile, the best strategy is to invest in the last quartile. Schemes that have not done well in the last 1 year, because schemes follow a twisted curve where you typically invest into a scheme which has given the largest return, and then next year that scheme doesn't give return. So what this tells you is that constant review, active management is essential and becoming paramount to make sure that you have an outperformance to the benchmark, which is the sole reason why we come and invest in the equity markets. If you see the next slide, it clearly will tell you that understanding the investor behavior is the key. Many mutual fund investors adopt a passive approach. I have seen majority of my life, I have seen investors sitting with 30 schemes. I started an SIP 6 years back, still going on. I've invested in one fund 5 years back, 7 years back, still going on. But you do not look at your mutual fund investments for 5 years, but you want to look at your equity investment or a stock investment within 5 days. Both of them are, by the way, equity investments. Both of them are equity investments, but your period of evaluation for stocks comes even to 5 days, but your period of evaluation for mutual funds never comes. So the behavioral aspect is such that mutual funds are still being looked upon as fixed deposits or higher risk fixed deposits. Ek baar dal diya, fill it, forget it, and shut it. It is not that. This is the approach which has delivered a 80-85% underperformance. So it is not an approach of passive investment. It is an approach of active investment with the consideration of tax, to make sure that you're not generating short-term taxes, to make sure that you are generating long-term capital gains. At the same time, you're still invested in the best schemes to make sure that you generate that kind of an alpha. Moving on, This is where exactly Markets Mojo comes in. This is where the dream of Markets Mojo comes in for the retail investors. Let's look at what we have done today, which is different from anybody else in the market who's present out there, is a holistic approach to mutual fund investing. Let's see how we and why we call this as holistic approach. Some of the unique features that we are launching under www.mojomf.com. Number one, you will get research and advice on regular basis on every single mutual fund scheme. Like we cover every single stock in the market, we will cover every single mutual fund scheme. You will get a Mojo score on all mutual fund scheme. For some of you who've seen the mutual fund section, it used to have buy, sell, and hold. What we have now done is that we have introduced the whole Mojo score, which is a score out of 100, just the way we have it for stocks. The same score is now available for each and every scheme. So it doesn't matter which scheme you want to invest in. Our objective is that I have to rate each and every scheme with the same scale. And we've clubbed the whole industry and rated them on the same scale. The key differentiator here is that if you go to any other advisor slash distributor slash your broker, they will tell you, sir, ये dividend growth में इतना है, sir, ये income में इतना है, sir, ये flexi cap में इतना है. If the investors know all of this, that if there are 30 categories, I have rating in 30 categories. I don't want to know that. I am an investor. I want to know ये सब 30 category में सबसे best fund कौन सा है या best scheme कौन सा है. So we have actually cut down the whole industry, and we have we've taken the whole industry and we've rated the whole industry as 4,000 schemes, and we've rated each and every scheme on the same scale. Equity separate, debt separate. So that is the reason, that is the biggest innovation that anybody would have done in the industry, that we have today broken the whole industry, clubbed it together, so that you don't have to worry about whether I go into income or dividend yield or I go to sectoral, but you see a common rating platform which will tell you what is the best fund to buy at any given point in time. We have introduced seamless transactions. You do not need to transact with anybody else. You can now transact from the platform itself. And obviously, once you start the platform, as you've seen in the portfolio optimizer, or as you've seen that as soon as you start the transactions, we will be advising you when you will get out or when you will be able to invest in some other schemes. You can invest in Lumsum, SIP, and yes, model portfolios, mutual funds are ready. We call them as the curated baskets. I'll show you the 4 baskets today, and we'll show you also what the kind of return that they've generated over the last 5 years, so that you can start investing directly into the baskets of 3 to 4 schemes. We have also given customers an import facility. It takes less than 30 seconds for you to import your holdings, mutual fund holdings from any provider, consolidate it at Markets Mojo, and then start the advisory. So in 30 seconds to 1 minute, 60 seconds is the only time that you need require out there to import everything and start the whole advisory process. As I said, our biggest IP and USP here is the Mojo baskets, which will make the whole process easier, which will have the inbuilt model portfolio advisory, where you have to just decide how much you want to invest, and then it will allocate and will keep managing that basket for you. It will also keep managing the tax incidence on that basket so that you don't have excessive churn in the basket. It will be an active basket, but having said that, it will also consider loss and tax issues to balance out the returns, and we have some returns that we'll show you today. Mojo score, as I said, that the same score that you're in the habit of seeing on the equity side is something that you will see moving forward on the mutual fund side as well. Consolidation for all schemes together is the biggest USP and the IP that we've created here. Let's move. Now, What are the 5 categories? We know most of you are MOJO 1 members out here, in almost everybody. So we know what are these 5 rating criteria that we've given. Let me quickly cover those again. Strong buys, exceptional potential for significant returns. Our top recommendation. Please understand one thing, that Markets Mojo is the only company which has got the capability of going inside the mutual fund scheme and evaluating even each and every holding, because we rate each and every stock. So this rating that you will get here is not the rating that you will get anywhere else. We go down and even look at the mutual fund holding before we rate that particular mutual fund on exceptional potential for significant returns. Buy, attractive investment opportunity. Hold, maintain your current investments. Sell, evaluate the possible potential to exit, potential for lower returns or emerging risk. And strong sell, obviously high risk and unfavorable prospects, immediately get out. How is this score different from equity? On the MOJO, Markets Mojo website, strong buy is 80 and above. In mutual fund, strong buy is 65 and above. I'm giving you the scales today. You can take a picture of this so that when you go and you check out your schemes, you need to know what are the scales. Buy on Markets Mojo is 70 to 80. On mutual fund, buy is 50 to 65. Hold is 50 to 70 in equity, 35 to 50. In mutual funds, sell is 20 to 35 in mutual funds, and strong sell is below 20 in mutual funds. Very, very easy to compare. You don't have to look at it because you will get the score as well as the grade, which is strong buy or buy. It is just a reference point that we're giving you, that when a scheme will move, with what score it will move from either of these categories of the ratings. Now, looking at how the MOJO score has outperformed, the base IP, which we always call as the secret recipe of Markets Mojo. If you look at the equity schemes on a 5-year CAGR basis, the strong buys have generated a 23.5% return versus a benchmark of 18, buy 20.1, hold 20.3. So even if you are in strong buy, hold, you've beaten the benchmark. Sell and strong sell obviously has underperformed. So what this tells you is you should strictly follow the advice and stay invested in strong buy, and not below hold at maximum, but strong buy, hold. You have to understand that this is the index. So strong buy there can be 25 schemes. But जब हम basket बनाएंगे इसका, when we'll make the basket only out of 3-4 schemes. And when you make the basket, the returns look further better because you're not investing in 20 schemes on strong buy, you are investing in 4-5 schemes. So your selection of schemes within strong buy becomes critical. That rationale of how do you select schemes from strong buy is there in the whole model portfolio, mutual fund model portfolio approach, or the basket approach which we'll come shortly. We believe mutual fund investments require active management like equities. MOJO MF will ensure that your investments are actively managed and focusing on maximizing returns. Mutual fund MF provides exclusive advisory like no other platform in India. Our MOJO score out of 100 obviously is the most unique tool for better investment decisions. Moving on, let's look at some cases. Once you upload your portfolio, you may have a scheme you invested 2 years ago and is currently underperforming. Obviously, we will tell you when to sell it at an appropriate time. You may have a scheme that you added 6 months ago and that has peaked. We will tell you whether to hold or to sell, depending on what is the rating of that and also what is the impact of tax on that particular scheme. If you purchased a scheme, say 6 months ago, is at a loss, obviously we will guide you whether to hold or cut the losses out there. So whatever your scenario, the scenarios can be much wider than these 3 cases out there. Because once you upload your portfolios, there can be, we don't know, there can be 30 schemes you've invested in, some SIPs going on and all that stuff. So once it comes out there, we will optimize the whole portfolio and keep guiding you in terms of how you need to do two things. One is follow the approach of the ratings, and B is to keep consolidating, because consolidation is also key to make sure that you outperform the benchmark. Now, the most important discussion is that the whole platform is free to all MOJO One subscribers. It comes with your MOJO One subscription. Any new user who comes to the site will not be able to have access to these ratings. It is only a proprietary IP made for MOJO One subscribers. So within your subscription plan, for whatever amount is going, MOJO One subscribers will get all the ratings free. The only thing you have to do is, because of regulatory compliances, you have to complete your KYC with us. If we do not have the KYC, you will not be able to see the score. Please don't ask us this, that मेरे को score नहीं दिख रहा है. KYC is you have to do your KYC. Once you do with your KYC with us, the whole feature unfolds itself for you. So congratulations, we've added one more platform onto MOJO One subscriber at the same cost which they have already subscribed for. As I said, the only underlying condition out there is that you have to complete your KYC with us to start seeing the ratings and the whole product. You can see the base analysis. You will not be able to see the score. You will not be able to get our advice unless we have your KYC. Once we have your KYC, the platform becomes obviously free for you. With that note, how does it look? How does it work? All of that I will leave on Amit to talk about it, and I'll come towards the later part to explain you the mutual fund model portfolios and the baskets. Amit, on to you.
Thank you, Mohit. Very good evening to all the viewers, and wish you all a very happy Janmashtami. It's a great day to launch our most awaited mutual fund product under the wealth management business. So, as we have all seen that, in terms of advisory, it's a great tool to understand and quickly figure out which mutual fund to buy. We have tried to make the entire transaction also very simple and very seamless. We have very clearly identified that mutual funds as a platform is going to be used by a lot of new to market customers. So the entire transaction platform has been made in such a way that you experience the entire investments in just 2 or 3 clicks, and which I will try and show you as to how you can exactly do the transaction. Also, because it's a transaction platform, there are advanced security measures which will definitely ensure that whatever you are transacting is completely safe, and it gives the entire peace of mind to all our customers. And lastly, we have done all the checks and balances. We have integrated with our partners, BSC Star, to ensure that whatever transactions you are doing is on a real-time basis, and it gets executed on a real-time basis as and when you try and place the order. In order to get onboarded, as Mohit has mentioned, that in order to see even the advisory part, it's very important that we complete the KYC. So the moment you log in into the platform, when you try and look at the research part, or when you try and look at any particular scheme, it will throw a pop-up that you need to complete your KYC. It's a very simple 3-step process, and it will not take more than 5 minutes for any customers to complete the entire KYC. Once the KYC is completed, you will be able to invest. You will be able to see the MOJO score and the entire advice which is available on the platform on all the 4,000 schemes of mutual fund. The moment you complete your KYC, the next most important thing is to import your portfolio, and we have made it extremely simple. This time it is not like in equities where you have to select your brokers and all. You can directly upload the entire mutual fund which you must have transacted across multiple brokers, be it any players, whether it's Zerodha, whether it is your bank-led brokers, you will be able to upload directly the CAM statement, and that will bring in all the mutual funds which you have transacted till date, whether it is in direct, whether it is in regular, everything will come over into MOJO platform, and you will be able to start looking at the advice and an analysis of the entire portfolio. So all you need to do, there can be two ways. One is that you just upload your CAM statement, or you can just enter your mobile number, and the moment you enter your mobile number, if it is linked to your PAN number, automatically the entire holding will come on to MOJO MF, and you will be able to see it on a real-time basis. Once you do that, if you look at it, you will clearly have a demarcation, because you will be transacting with us also. So whatever schemes are available in your portfolio, you will be able to know whether it is an external holding or whether it is an internal holding. So whatever external holdings which comes through your import will be visible, and at the same time the entire advice will be available. As you can see, there is a buy or there is a strong buy. If there is a sell, everything will be visible to you, and at the same time you can also see the overall unrealized gain or unrealized losses into your portfolio. Whatever baskets you will transact on, whatever individual transactions you will do, everything will get covered over here, and in that one screen you will be able to see all the external transactions which are coming onto MOJO MF, as well as whatever transactions you do, and you will see a consolidated view of your overall holding. One good feature over here is that in case if you want to monitor the overall portfolio, you can even enter the mobile number of your wife or anyone else, and you can bring in the other portfolio also, so you can see a consolidated view of your entire portfolio. This is how the research page has been created. We have tried to bring in all the possible filters which can help you to decide what exactly you want to see when you are trying to do a research on mutual funds. Say for example, you want to see all the strong buys which are there. You have to just select strong buy on the left, and you will see all the schemes which are a part of our strong buy basket. If you want to see only buy, it is available. If you want to see all together, that is also available. You want to, this is just a screenshot, but if you want to select a AMC, on the left hand side, we have given all kinds of filters, whether you want to see on the basis of return, in terms of absolute return, in terms of CAGR return, all the filters will be available to our customers, and all they need to see is to just select, and on the right hand side, everything will come. You can just select a particular scheme, and you can look at that individual scheme in detail from this page. And this is how an individual scheme will be visible to you. So there will be a MOJO score. There will be the real-time NAV. What is the one-day change? What is the one-year change? And at the same time, all the key indicators in terms of what is the 3-year return, what is the SIP return, what is the fund age, who is the fund manager, everything, all the details will be available. And at the same time, we will also show the other funds of the same category, so that you get to compare it with the other funds in the same category. Now, if you see on the right hand side on the top, it's just one single click in terms of placing an order. All you need to do is to enter the amount, how much you want to invest. If you want to create an SIP, you have to select the SIP. The moment you select the SIP, it will ask you a particular date on which you want to place the SIP. And once the mandate is created, automatically the SIP will get triggered on that particular day which you had selected on a month-on-month basis. In case if you're not really sure of placing an order at that moment, you can always add it to the cart, and probably as and when you can want to place the order, you can visit the cart and you can place order directly from the cart as well. So it's just as simple as selecting a scheme, just entering the amount and placing the order. In case if you want to create a SIP, you have to select the SIP, just enter the amount, select the date, and the SIP will be created. First time you will have to give the mandate for that particular SIP. So, Mohit, if you can just continue from here.
Yeah. Amit wants me to cover this because this has been your requirement before Amit came in. Last, I think, couple of years since the time we came out with the mutual fund section as a soft launch, you've been asking us that, can you give us the mutual fund model portfolios that you can directly invest in? And the answer is yes. We have designed 4 curated baskets for different kinds of investors using our base score and IP just the same way that we do model portfolios on Markets Mojo. We have created 4 different baskets, and I'm going to talk to you about these 4 different baskets now and tell you exactly what these baskets do. Whenever we have used our IP and created something which is either turnaround or which is either reliable performers or Mojo stocks, that curation of stocks has worked always very well with us. So be very serious when you look at this particular section, because this can be a game changer as far as the industry goes, as far as you go in terms of potential of beating the benchmark. Let's move on and dive into this. Why have we created these curated sections? First, please understand that there is a reason that the broad set of investors are not able to beat the benchmark by being in mutual funds, by running SIPs for 4 years, 5 years, and 6 years, is because the decision making is not that easy. It's complex. There are thousands of mutual fund schemes available. And finding the right scheme is not something which is a very easy job, either directly or even through an advisor, because today you may have the intelligence of what these schemes are, but clubbing that into 3, 4 investments or 5 investments is not an easy job. It's a very time-consuming analysis. There are sometimes you may be able to choose the right schemes, but your allocation goes wrong. So the risk of imbalance exists within the portfolio, that if I have taken 4 schemes, so what all allocations I need to give these schemes, whether it should be equally allocated, whether we should give allocation higher to one scheme than the other scheme, whether I need to create a separate portfolio for my wife, for my sister, for my daughter, for my father, or whatever that goal-based investing is. All the requirements are very different. And it is not about just taking the best performing scheme जिसने 1 साल में अच्छा return दिया उसमें पैसा डाल दिया. That is not something that will work. That is something that I have shown you that 80% time these schemes underperform, even if they are the top performing schemes. So it's a science. Don't take it lightly. This is not FD investing. This is not fill it, shut it, forget it. This is not a passive investment. Mutual funds are actively managed instruments, the same way that you manage your stocks. Having said that, as I said, we will, in our baskets, we have already inbuilt the tax component so that you don't get adversely impacted by undue tax that you may pay on short-term churn. These are not majorly churning baskets. These are sensibly created baskets to outperform the index, and obviously lack of confidence. With that note, let's move. Introducing the effortless solution to optimize your investments. I'm glad to introduce you to the mutual fund baskets. Let's look at what are these baskets. The mutual fund baskets are expertly curated collection of top performing mutual funds designed to align with your investment goals and risk tolerance. Very important, investment goals and your risk tolerance. I will be talking about your risk tolerance in the 4 baskets that we are talking about today. And instead of doing it yourself, which is sorting out through thousands of funds, you get a focused selection of 3 to 4 funds or schemes that you can invest in, and somebody to guide you when to move out of one scheme and get into the other scheme. The ongoing advisory is very critical than one-time investment in mutual fund. Classically, I've ran large mutual fund portfolios. In fact, when I used to be with ABN AMRO Bank, this is way before I'm talking, I think ABN AMRO and Motilal Oswal, when I used to run the whole wealth portfolio out there. I've essentially run wealth for years, and I've seen one main problem is that investors typically invest and forget about their investments on mutual funds. And this forgetfulness of mutual fund is not something that plays in their favor. You have to keep revisiting, like the way that RPMS investors, typically do a review with us. You have to do a review on your mutual fund baskets, on your mutual fund investments, to make sure that you are, over a period of time, always invested in the best basket or in the best schemes within the basket, to make sure that you're outperforming the index. We will prioritize tax efficiency. Our baskets are designed to minimize unnecessarily churning on your investment. So don't worry, these are not that every 2 weeks or 3 weeks we're changing a scheme. We have taken into consideration of tax efficiency, and there is hardly any churn in these portfolios. Unless it is absolutely required, we will not be churning these portfolios. These are goal-driven and diversified baskets. Obviously, the selection is customized. Each basket is curated based on specific financial goals and risk tolerance, using an advanced algorithm that we've created to match your investment objectives, personalized and aligned to your requirements. And every investor may have different financial needs, and we are considering different financial needs for different baskets. So you have a liberty of choosing any basket. You can invest money in 2 baskets, 3, all 4 baskets. These are 4 different, very different flavored baskets that we'll talk about. Targeted, and it's got varied market exposure. Funds are chosen from different market caps. They are chosen from different sectors. They're chosen from different scheme nature in terms of flexi cap, multi cap, and so on and so forth. So we have done all that hard work to consolidate thousands of these schemes into maybe 3 or 4 schemes that you can look at investing, and you can stay invested. And lastly, performance monitoring gets much more easier. Everything is at one place. So like a lot of majority of our investors typically import their portfolios from Zerodha and other broking houses to see consolidated advice from Markets Mojo. You obviously have the platform today to import all your mutual fund holdings and see and performance monitor all of that at one place. There are dashboards that are available, and obviously, as Amit was pointing out, there is a single click of execution that we have provided out here, provided everybody does the KYC. KYC, as I am pointing out, is the key. You will not be able to see anything unless the KYC is done. Once the KYC is done, the platform is freely available for all Mojo One subscribers. Let's now look at the regular rebalancing and updates, how that happens. Rebalancing is carried out at set intervals, such as annually, to ensure that the portfolio stays aligned with your goals. We will be looking at adversities in the portfolio on a day-to-day basis, but alignment is something that we will stretch as much as possible so that there is limited tax impact. And as I said, our objective is to create benchmarking beating returns post-tax rather than pre-tax, in terms of the churn needs to be in control. Advice generation, you will get buy, hold, sell recommendations on your portfolio to ensure that you don't miss out any market opportunity, and obviously timely updates, regular reviews, regular portfolio reports to make sure that you are updated. You're storing those in your desktop for your family's consumption, so that you know that you're growing on an overall basis in terms of how the portfolio is growing. We will use all channels of distribution to reach out to you: emails, obviously website, app, as well as WhatsApp, to reach out to all our mutual fund users. Now comes the main thing, which is introducing these 4 exceptionally created mutual fund baskets. Let me dive onto these 4 baskets to show how they are different. The 4 baskets names that we've given is basket number 1, wealth multiplier. This is a balanced growth with the power of diversification. This is for people who have medium risk, where you want to just keep multiplying your wealth over a period of time. And when you see this particular product, you will know what I'm talking about. The second is people who keep talking about which sector is the best sector. So we've created a special IP to identify sector rotation funds. So these are sectoral funds, which will make you place in the right sector at the right time and the schemes that are under that. So sector rotation is the second basket. The third, obviously, is the most aggressive basket, which is young and aggressive. This will obviously go in for high growth opportunities, essentially by investing in mid and small caps. Young and aggressive goes in very aggressive in terms of how the allocations will look at the market cap level as well as a scheme level to generate way higher alpha. And you will see the returns of these 4 baskets as we'll move forward. And the fourth is what we've created for our extremely conservative users, which is an attempt to beat the FD. So whether you keep your money in FD and you get the liquidation the same day, or you keep in mutual funds and you get your liquidation in T+1, T+2 days, beat the FD is to aim and try and generate that extra alpha than the bank FD to make sure that you're parking your funds, and every bit that you're parking, whether in FD or in mutual fund or in FD through mutual fund, it gives a little better returns out there. Let's jump on to the first one, wealth multiplier, which is balanced growth with the power of diversification. The risk levels are medium risk, return potential is high return. So medium risk and high return. What is inside this particular basket is a strategic mix of large cap, mid cap, and small cap funds. This is a diversified portfolio. So the diversification approach captures the growth of potential of smaller companies, while it also benefits the stability of the larger companies by introducing large caps in this. Very balanced portfolio. This is ideal for balanced investors who seek growth at a calculated level of risk. They want to have higher returns, but they want to keep the risk level medium or in control. Very, very good for those investors. But the type of funds that we've included is large cap, mid cap, and small caps. And if you look at the performance XIRR on a 5-year basis, it is 21.1%. I'm very happy to announce this. With a medium risk and a high return, the performance is 21.1% versus the benchmark in the same period at 15.3%. Can you even imagine, by keeping the risk as medium, an alpha of 5.8% CAGR on an annual basis over a 5-year period, what kind of extra wealth that can create? 5.8% of alpha on 15.3, performance XIRR of 21.1% with medium risk is the basket for you, which is the wealth multiplier basket. Moving on, why choose the wealth multiplier? Obviously, the basket is designed for investors who want best of both worlds, which is stability and growth. Significant outperformance to the benchmark by 5.8%, which is 21.1%. It is the smartest choice for growing your wealth over a longish period of time. You know, people who want to grow their wealth over 5-year, 7-year, 10-year period by beating the benchmark and consistently keeping their risk profile as medium, excellent for those investors. Let's move on. For equity flavored investors, sector rotation, capture the market's best opportunities one sector at a time. So here we will talk about a sectoral fund. Risk levels are high risk, returns are high returns. So high risk, high return category. Dynamic selection of sectoral and thematic funds. We will be picking up, you keep asking us, sir, how will defense do? How will IT do? How will pharma do? So this particular fund or this particular basket will answer all of those thematic ideas that are going on in the market and will keep investing in the best themes via the sectoral and thematic funds and schemes to consolidate and make a concentrated portfolio for you. Ideal for investors looking to leverage growth in specific sectors with high return potential. Huge XIRR performance of 22.9%, which basically outperforms on a 5-year basis the benchmark of 15.3% by 7.6% annually. So this is huge. 7.6% of outperformance over the benchmark, according to me, is huge. And this is ideal. If you go to the next slide, this is ideal for which investors? Sector rotation basket is perfect for those who want to seize high growth opportunities by targeting sector expected to lead the market from here on. Not lag, but lead the market from here on. And obviously, a robust 22.9% XIRR returns gives you a compelling reason to invest in this particular product, which is a outperformance of over 7.5% onto the benchmark returns. Comes the third, which you all will be very excited to see. I'm sure Markets Mojo users are aggressive, as I have noticed over the last 1 decade. So let's see what is young and aggressive. Fueling your ambition with high growth opportunities, high risk, high return. It goes without saying. It's a targeted mix of mid and small cap funds, focusing on companies in their early to mid stages of growth, set for substantial capital appreciation. This is ideal for young investors with high risk tolerance seeking significant growth potential. Even if you're a patient, seasoned investor, you can invest in this provided you have a long-term outlook. Types of fund included are essentially mid and small. We will not be investing in large cap in this particular basket. XIRR, 5-year XIRR returns are 25.8%. 25.8%, which is an outperformance of 10.5% to the benchmark of 15.3. So I repeat, 10.5% outperformance. Performance of this particular basket at a XIRR level is 25.8% on a 5-year basis. Huge outperformance of 10.5% comes under the young and aggressive. Who should be investing in this? As I said, the young and aggressive basket is designed for investors eager to capture high growth from emerging and expanding companies. Essentially, we will be looking at schemes that are focused towards new age companies, expanding companies, smaller companies becoming mid-size companies becoming bigger. So we will be looking at the second and the third tier of the market and schemes that collaborate to the second and the third tier of the market. And obviously, an XIR is exceptional of 25.8%. Through the mutual fund on a longer period of time. This is a 5-year XIRR. I repeat, it's a 5-year XIRR, which gives an outperformance of over 10%. Moving on, the final basket is Beat the FD, which is low risk, steady returns, smart alternatives to fixed deposits. And if you look at this, this is extremely made for conservative, low risk, low return investors who typically have a choice of, can I get maybe a little bit better returns than the FD that I have placed. We will be investing in highly liquid and high quality debt instruments in this through the mutual fund instruments, ideal for investors prioritizing safety and liquidity. The performance XIRR on a 5-year basis is 6.8%, which is outperforms the benchmark, assuming that the current FD rate is around 6.5% by 0.3%. So a good alternative for people who are parking their money in FD. And over a longer period of time, we will start investing in a little longer duration instruments out here to try and see if we can improve the returns out here from 3 to a 5-year perspective. Who can invest in this? This is a substitute for the FDs. So obviously people who invest in FDs, they can look at investing in this with an XIR of 6.8%. Focused for safety and liquidity at any given point in time. So this is a safe horizon for investors to say whether they can get a little better returns than the FD by investing in this basket. With that note, it takes me to a summary slide, which is wealth multiplier, medium risk, high return, XIRR of 21.1%. Sector rotation, you can take a picture of the slide. High risk, high return, an XIRR of 22.9%. Young and aggressive, essentially high risk, high return, investing in mid and small companies through the schemes. An XIRR of 25.8% and beat the FD, alternative to performing a little better than the FDs at 6.8%, extremely low risk and extremely obviously low return, which is at a 6.8, but still better than what you get with the bank FDs. So all of this is now available. What is coming next? Because we've just started. As you know, when we started in 2015 with Markets Mojo, we are starting today in 2024 with mutual funds. So the next 5-year journey is exciting. We are coming with the mutual fund portfolio optimizer so that all your holdings can be taken in with one approach, and we can keep optimizing the whole holding at a family level rather than at a client level. Tax-based scoring, my dream is to include tax as an incidence within the score so that becomes a tax-based post-tax advisory score. And that is something that we are already working on. Family-wide advisory. We will soon offer advisory services across your full family assets. Obviously, we are going to enhance the product offering. We will get into bonds, corporate FDs, loans, mutual funds, loans against shares and mutual funds, and the whole asset allocation and financial planning, which is my personal dream to bring forward to the Indian investor category, and the complete risk profiling so that every client has a customized personal portfolio approach rather than a generic approach. With that note, Mehtab, let's open the dais for Q&As. Let's answer as many questions as we can for the investors today.
Sure, sir. So firstly, a lot of viewers are congratulating us for the launch of mutual funds, sir.
Thank you so much, everybody. It is your kind wishes. You have pushed us. Again, you pushed us. I personally feel that we keep getting pushed by investors, and we keep coming out with ideas. But I personally believe that the scoring mechanism that we have created, the baskets that we have created, can be an industry game changer, and we'll keep doing our best effort to make sure that we maintain our strategy to enhance our clients' returns. But thank you so much for all your kind wishes.
Thank you.
Yeah. So moving on with the first question for today, we have Mr. Mehta asking, I manage mutual fund portfolio for my mother and wife as well. Can I import and manage their portfolio as well through MOJO MF?
Yes,
Yes,
Mr. Mehta,
you
you
can
do that.
You can definitely import. All you need to do is to enter the mobile number of your wife, and probably whatever is the PAN linked to that number will get imported.
This next question, it's from Mr. Nagula. Hello Moiji, congratulations on the new business start. My question is the investment through Mojo Basket in regular or direct?
This is in regular, sir. We don't do direct. This is in regular only. Our concern is to earn money for our investors by giving the right advice. We don't do any direct. If that is your question, all our investments will be through the regular plan, sir.
So this next question, it's from Mr. Milan. Good evening, Mohit and entire Mojo team. Congratulations for the MF platform with add-on features. However, how frequently you would be changing the ratings?
Ratings can change any given point in time because rating doesn't, we don't know what your holdings are, right? So ratings will be changing on a real-time basis as we do rating change for the stocks. Advisory portfolios will consider tax impact, and that's when we will do it because, we don't know if you're holding a particular scheme or no. So your actual pinpointed advice to you will only come once we know whether you're holding the scheme or not. The only way to know is to import the portfolio because that's the only way, credible way we'll know that you're holding that particular scheme. And there is an internal mechanism that we have developed that from, even if the score changes, we may advise you not to exit if there is a large tax incidence that is coming in. To give you an example, let's assume that you're holding a scheme for 10 months and we are waiting for 2 months to get over for 1 year, right? And let's assume that the scheme that you're holding moves from a hold to a sell. Now, this is the decision which is very key, that how much depreciation in the return that will come from hold to sell versus the tax incidence that you have out there. So these are the kind of decisions which will be applicable only at the portfolio approach. At an overall scheme approach, we will change the rating in the 10th month itself because the rating has changed. But as I said, in your portfolio, we may say that still hold on. We believe that even if it is a sell, I think the tax incidence, the sell downfall may not offset the tax incidence out there. So keep holding because it's just a question of another month or 2 months. So all of that will be considered as a part of portfolio advice. But at a single scheme level, we will be changing the ratings on a real-time basis, sir.
Moving on, this next question is from Mr. Devendra. How long one should wait for this new feature to establish its efficiency and real credibility?
Sir, after the webinar, you can start investing. We have waited for 3-4 years to reach to this point to see that these numbers are collaborated with the way that we are seeing returns. I don't think so. You need to wait. I think people, when we even launched the mutual fund, people started the model portfolios on Markets Mojo. People started making money from first day itself, and you cannot typically go terribly wrong here, primarily because we have a logic basis which we are selecting that particular scheme. And we are not looking at very small AMCs. We're looking at larger AMCs only. So you are basically changing your fund managers. I don't think so. I would have had worry if we were starting a new equity portfolio. But on a fund of fund, this is a model portfolio is what? Basket, mutual fund basket is what? We are creating a fund of fund. We are creating a basket in which you're investing in other funds, right? So there is nothing to be worried about. As I said, your time for establishing the authority on this is immediately. So you don't need to wait at all, in my opinion.
This next question, it's from Mr. Anup. What is expected churn? If it is too high, we also might have to consider exit load.
We have seen that the churns are not even 1 times in a year, sir. So most of the schemes, the churns are not as high as you're thinking, because we are considering the exit loads as well as we are considering the tax incidence when we are creating these baskets. So you don't have to worry. As I said, there's a lot of work and thought process that has gone in. This is not a churn instrument. Churn instrument can be a model portfolio on Markets Mojo. Mutual fund is not a churn instrument at all. It is for long-term capital appreciation, very well considering exit loads, very well considering tax efficiencies to make sure that you are not losing money on either side. But having said that, I must point out there that, it is something that I've seen, and that is the Indian, and I'm not talking about you, sir, I'm talking about all the Indian investors, that we love to save money, right? Whether it is saving by investing a direct plan, whether it is saving through a discount broker, whether it is trying to save tax. So for me, if in 4-5 months, even if my portfolio is up and I personally feel that I can generate a way higher alpha into investing into other schemes, I will not care for the tax, right? Because our objective is tax कब भरना होता है और tax कितना भरना होता है. Tax you are filling only if you're making money, and tax is a component of how much money you're making. But it is not the objective of the advisor or the client. Our objective is to maximize returns. Because tax, sooner or later, whether you put it on 15% or you put it on 20%. Today, if I put tax on 20% and if I take a higher slab also, but if I can compensate by making another 5% CAGR, what is a better decision? I leave the choice to you. But having said that, as I said, these baskets are made as tax-friendly and exit load-friendly baskets.
So this next question, it's from Mr. Wadwa. Amit ji, what is the advantage of buying mutual funds via Markets Mojo over a discounted platform like Coin, Grow, Direct Mutual Fund?
Sir, as we have already explained that it is always better to do the research and advise, get advice, and then invest into mutual funds. So the whole idea of you investing directly into mutual funds, we have seen that how the underperformance is played in terms of so many schemes. So Abhi Mohit exactly said the same thing कि अपने को objective should be that we have to make money, and these kind of baskets which are going to be available on our platform, the kind of advisory service which we are going to give, it will make a lot of sense because end of the day as an investor you generally end up just buying and being a passive guy. We are going to continuously monitor your position. We are going to continuously advise you what you need to do with your holding, whether you need to move into a different fund, what is the kind of return it is giving. So the जो पूरा active management है, that is something what Markets Mojo is going to do it for you. And there is no reason for you to actually think that it has to be done through somewhere else. Secondly, we have tried to make the entire transaction platform so simple and so easy to use कि मुझे आपको डेमो देने का ज़रूरत ही नहीं है. You will log in into the Markets Mojo platform and you will realize that everything is so simple and so clear कि आपको खुद को इंटरेस्ट नहीं होगा कहीं आप और ट्रांजैक्ट करें. तो आप एक बार just log in into mojomf.com and you will realize that what I am talking.
Moving on, this next question, it's from Mr. Bidyut. Will doing the KYC with Markets Mojo affect in any way the mutual fund holdings presently managed by banks or other wealth managers?
Not at all, sir.
Yes, sorry.
Not at all. Your KYC is, it will not affect any of your holdings because unless you import your holdings, and even if you import your holdings, you're seeing it here. So KYC doesn't disrupt anything, sir. Importing the holdings also doesn't disrupt anything. When you're obviously buying a basket that you're buying through us, so that is happening out there. When you're selling a scheme and then buying through us, then obviously it disrupts. But otherwise, KYC doesn't disrupt anything. Importing your portfolio doesn't do anything. Please do it fearlessly.
This next question, it's from Mr. Pandit. Hi, sir. Thanks for one more product with high expectations. From layman like me, need to know if this mutual fund platform, can I have a different portfolios for evaluation like we can do it on Mojo equity platform? These portfolios are created with different goals and thus this inquiry.
So
If the question I understand correctly is that can you have different model portfolios which you need to create, or because ultimately like in equity you create portfolios by just entering a quantity and stock and price, but mutual fund mein, as you can see that the option is largely to import the portfolio, right? And when you import the portfolio, it means that it is the actual portfolio which you are trying to transfer from wherever you have transacted. So, if you will have, say, multiple portfolios in your family, you will get to see those separate portfolios. But if it is most of the transactions are done in your name, then it will ultimately come under one particular portfolio and all the schemes will be visible. And say, for example, if you transact in baskets, sorry.
I think, sorry, Amit, I think the confusion here is that if you are on the Markets Mojo platform, you can just put 1 lakh rupees and you can create a model portfolio to see what are the holdings in the model portfolio. Sir, that is not an option you can do out here. Only if you're investing in the basket will get revealed to you. It will not get revealed and rebalanced automatically so that, you can't create a dummy basket out here, if that is what you're asking. And the second point is you obviously can create multiple baskets. So you can invest in all 4 baskets if you feel like. You can allocate money to all 4 baskets and you can invest, that is fine. But you cannot create a dummy basket and then run it as you can do in the Markets Mojo platform.
This is from Mr. Shibu. So if the mutual fund is purchased through my stock broker, whether I can sell it through MOJO platform?
Yes, sir. It depends. If you have taken the mutual funds in direct scheme, then you will not be able to sell it over here. If you have bought it in the regular scheme, then definitely you can sell it from our platform. In case if you have bought it in direct, then you will have to sell it over there, and you will have to buy it over here.
Which is invest in.
This next question, it's from Mr. Bala. In the young and aggressive basket, the reliance is in mid and small cap stocks. In recent times, you and Sunil have advised that the market is overvalued and we need to be cautious. In such a situation, how would this operate?
No, sir, you need to be cautious is absolutely fine, but you need to stay invested as well, which is the philosophy that we are following out here. Now, obviously, young and aggressive, see, these are 5-year CAGRs. So even if the market goes down, obviously we are considering that because when we are looking at 5-year, 6-year, 7-year CAGR, market has not remained high all the time. So this return calibration is over a longer period of time. So you may see, a correction whenever the correction comes. Obviously, every scheme will correct and everything will happen out there. If you're already invested in mutual funds, obviously those schemes will also correct. So there's no difference whether you invested in X mutual fund or a Y mutual fund if we are recommending out there. If you are staying invested, then at least stay invested in the best schemes. And the themes play across in a very different way, right? So mid and small cap may come down and may move up fast as well. So what cannot be taken away is the market volatility and the market movement. But if you're a mutual fund investor, unlike equity investor, your outlook has to be long term. And if your outlook is long term, then you are investing for a long term period, then the volatility of 3 months, 4 months should not typically affect the investment philosophy.
Moving on, this next question is from Mr. Subodh. Sir, I am a Mojo member for all your products from 2020 till 2040. I have made good returns on almost all Mojo products. For mutual funds, I would like to invest in the name of my wife. She is not a member of Mojo, but my Mojo nominee. Can I set up Mojo MF account in her name? How can it be done? Thanks.
Sure, sir. Definitely, you can create a Mojo MF account. It is absolutely free. All you need to do is to just complete the KYC process of your wife, and you can start investing in her account. There is absolutely no problem.
So this next question, it's from Mr. Trivedi. So there are three questions in total. Firstly, will you rate index funds? Second, I have already completed KYC on Markets Mojo. So do I have to do it again on mojomf.com? And third, is it possible to make transactions for family members also?
So, in terms of every question, will you rate index funds? The answer is yes. We are having a rating on all the funds. In terms of you have completed the KYC on Markets Mojo, I am assuming that you must have done the KYC for mutual funds only, which there was a link from Markets Mojo. So once you click on the Mojo MF and when you log in through your credentials, you will get to know whether the KYC is completed or not. If not, it will automatically, you will receive a pop-up saying that you need to complete your KYC. It is a very simple process. The moment you click on it, it will take you through the 3 steps and you will be able to complete the KYC. And lastly, for one single account, you can only do transaction for yourself. In case if you want to do transactions for your family member, say for your kid or for your husband or wife, you will have to complete the KYC for those members also. Because as per guidelines, any transaction which needs to be done needs to complete the KYC formalities. So this is how you will have to go about it.
Let me add one point out here. What Amit is mentioning is that if you're a non-Mojo professional user, let's assume that your family members are not using Mojo One, you can open up a separate account on Mojo MF for them. You don't have to pay for Mojo Professional or Mojo One out there, and you can start transacting directly onto their names as well. So please make sure that if you're investing, if your wife is investing, if you're investing in your kid's name and the holding is kid's name or wife's name, you don't have to buy the Mojo One pack. You can go to mojomf.com, do the KYC for your wife or for your kids, and you can start investing on their behalf. And the platform will work seamlessly for you, for your wife, or for your kids as well, without having a Mojo One subscription. So that is absolutely fine. You can do that.
So this next question, it's from Mr. Rohit. How do we invest in these basket? Can you recommend if I can invest lump sum or in SIP or consider two baskets, etc.? Is SWP also possible for these schemes?
So, Mr. Rohit, investing in basket is as simple as just doing one click. You will see the baskets on our platform. The moment you click on it, it will ask you whether you want to do a lump sum investment or you want to do an SIP. If you want to do a lump sum, you just need to enter the amount. There is always a minimum amount that is required for each basket, because in the underlying schemes which are there, every scheme has a minimum amount that is required. तो जो भी आपका minimum amount है, अगर if you want to buy higher than that, you have to just change that amount and you can submit, and that's about it. It will ask you to transfer funds and the order is placed. In case if you want to do an SIP, the process remains the same. You have to select a date and and the tenure, and accordingly the mandate is set, and the SIP will get triggered on the requested date which you have selected. Currently we have just started, so currently SIP is available, but very soon we will introduce SWP as well. So anyways, we have just starting the mutual fund, so SWP feature can come over a period of time, and we are going to introduce that as well.
So this next question, it's from Mr. Dheeraj. Hi sir, congratulations on adding another feather in your cap. My question is on maintaining an emergency fund. How much and where should I invest it?
I don't know what the definition, sir, of the emergency fund is. If that emergency fund is required at any given point in time, I would say put it in the beat the FD basket, because that's how you should typically play the emergency funds. But I strongly recommend that if your horizon is not 3 years and above, you should not be investing in the other three baskets. Use the beat the FD route so that your money is at least earning better than the fixed deposits in the market to play the emergency route.
So this next question is from Mr. Sandeep. Congratulations to Mohit sir and the entire team. I am a Mojo One subscriber. Can my friend who's not a subscriber invest through your platform after just completing the KYC?
Absolutely, Sandeep. As I said, that any non-Mojo One subscriber can do the KYC and can start using the platform free as well. So your friend, your family members, please tell them to make use of the strong rating philosophy and the experience that we have of curating these baskets, as well as the scoring phenomena that we've got. You do not need to be a Mojo One subscriber to use the Mojo MF platform. Mojo MF platform can be used by non-Mojo subscribers by doing the KYC immediately. You can do that. Please advise your friend to do that, sir.
This is from Mr. Rehan. Good evening, sir. Will I be able to use the website or the Mojo MF basket post expiration of my Mojo One subscription?
Yes, sir. You will be able to. Your Mojo One subscription has got nothing to do with Mojo MF. Even if the subscription expires, you can keep using the Mojo MF platform seamlessly. As I said, Mojo MF is not limited to Markets Mojo users. It's open to anybody and everybody. So even if your subscription expires, you can keep using it, sir. It is free for your lifetime, so you don't have to essentially be a Mojo One user to use it.
So this is from Mr. Vishal. Hi Mohit sir, how are you giving rating to mutual fund means based on past performance or based on holdings or any other thing? Please explain also how is our rating different from other institutes? Thanks sir.
Sir, our ratings are different from other institutes. We look at obviously our scoring methodology of the stocks because predominantly once we use that, we know what is a good quality, scheme within which you have high quality stocks. We know what is the result trend of these stocks. We know the scheme's overall valuation by looking at the underlying stocks valuation. Obviously, we also look at the return and risk parameters in terms of returns on a 6 months, 1 year, 2 year, 3 year, 4 year parameters, and we overlay that by the risk parameters. So the difference in our rating process and the market's rating process is twofold. One is that most of the market typically would rate a scheme on risk and return. Market doesn't have the strength of underlying rating the underlying stocks out there, which is something which is unique and only unique to Markets Mojo. That's number one. Number two is that we look at all 4,000 schemes with one eye. So we are not classifying schemes differently, that in dividend yield category, this is number one. In this particular category, this is one. So we are looking at all because our objective is, why, if you ask yourself, and we keep asking this question, is that what is the reason the investor comes to the market? I think the answer is very simple. Usko variety nahi chahiye. If you are coming for variety, then you're in the wrong business, right? You're only coming with one objective and you to get one answer, which is how do I maximize my wealth? तो उसके लिए अगर मेरे पास 50 कैटेगरी का 50 अलग अलग रेटिंग क्यों है? Why don't I have one rating which goes across all 50 categories? And that is the differentiation that we've got by getting the score which runs across all 4,000 schemes to give you consolidation of that particular approach of score and scheme. That is to me a industry path breaking IP that we've created. Nobody in the industry does that.
Moving on, this next question is from Mr. Jay Prakash. Hi Amit, I am currently invested in 5 mutual funds through the SIP route and giving me an annualized return of 18%. Do you think I should move to the curated basket? Please advise.
Yes, no, absolutely, Mr. Jayaprakash. You should be moving to curated basket. SIPs are like individual MFs which you are trying to invest and they are giving you a return of 18%. But the curated baskets which we have created, as you have seen when Mohit was taking you through the SIP baskets, the XIR return are much higher in most of the cases. And it was as high as 25%. And plus basket helps you to further diversify because there are multiple schemes in that. So my suggestion will be that you should definitely look at investing into curated baskets. It can be both SIP as well as curated basket, or it can be having an SIP in the curated basket, which can give you a much better return over a longer period of time.
One of the other things that always happens is that once we start an SIP, we keep doing an SIP. Every SIP typically captures that long-term tax benefit as well. So it is very advisable to look at your investments in an active way in mutual fund at least after a year to get the best tax advantage and to also then reshuffle it into the right scheme. Normally, the classical mistake that investors make is that they start an SIP and they run it till the time they stop the SIP. So वो 3 साल, 4 साल, 5 साल चलता रहता है, right? But we don't realize that there is a tax neutral event that comes in, and at that neutral event, you need to relook at your portfolio and say that can I change this particular SIP into something else? And those are the things that typically are our wealth erosion thing. Which is what we call as actively monitoring your portfolio, actively making sure that you are invested always in the right schemes. Let's Mehtab take the last question. And I think, Amit, we are getting a lot of flow of questions. Why don't we tomorrow do a Power Series Q&A on the whole platform? and we will take up all the questions. So everybody who's, you will get time to experiment the product. We will again meet tomorrow so that we will only keep a Q&A section tomorrow for you to just, ask any questions that are possible, because there's a lot of investors out here and we can't, in the view of how much time we spent, I think let's schedule a detailed Q&A session tomorrow with all the investors.
Right, and Mohit, I just want to make one request to all that the Q&A session tomorrow can be really very meaningful if all of you can actually log on to mojomf.com and try and complete your KYC. So it will really help you to go through all the pages, whatever we have designed, all the features, and wherever you have any doubt, it will be very easy for us to actually explain you and clear your doubts. So I will definitely set this webinar up. Great session.
Right, sir. So taking up the last question for today, it's from Mr. Rakesh. Hi Mohit, are you going to include NRI also in this mutual fund / wealth management?
Absolutely, sir. Why not? NRIs भी Indians होते हैं, sir. We'll definitely do that. We'll definitely include the NRIs in this as well, because financial planning, wealth management, I know the NRIs get the maximum opportunity of creating wealth opportunities in India. So it is paramount that our platform addresses both resident Indians and NRIs, and we will definitely do that. With that note, thank you so much for all your good wishes. Wish us all the best. We wish you all the best. And please do finish your KYC, experience the product, and we'll meet tomorrow for a detailed Q&A session.
Thank you. Thank you, everyone.